Bitcoin is in the air pocket between $112,000 and $115,000. Right now, it's trading at about $113,000. Should you be worried? Is it down? Come on, people. Nothing's wrong with Bitcoin. Nothing's ever wrong with Bitcoin. Yes, we're like 10% below the highest we've ever been in history, but we're at record highs compared to everywhere other than the last 3 weeks. So if your definition of an asset being down is it's down from everything, it's down only from prices in the last 3 weeks, that's pretty amazing. Because that means in the entire 16-year history of Bitcoin, you're up compared to every other price other than the last 3 weeks. Okay, so why are we down? Well, we're down because of supply and demand, because things go up and down on their way up. Same with every stock, same with every bond, every commodity. Doesn't matter how valuable something is, even gold, the 5,000-year-old, precious metal. It goes up and down on its way up. Bitcoin goes up faster than anything else in the long term, but it goes up and down on its way up. Okay, so it goes down because there's more supply than demand temporarily, more selling pressure than buying pressure. And that's primarily due to the Federal Reserve earlier this week deciding not to change interest rates. I think that decision was earlier this week. Regardless, it was, widely understood for whatever, news sources or whatever, that the Federal Reserve is not going to lower interest rates, which means interest rates are still high, which means Bitcoin has to compete with the federal government paying more than 4% interest for you to do nothing with your money. So the federal government is basically bribing you to do nothing with your money. And Bitcoin has to compete with that. Now, Bitcoin has been competing with high interest rates ever since it was below $20,000. So we've gone from below $20,000 to $113,000 in a high interest rate environment. So is it the end of the world if we have high interest rates a little while longer? Who the heck cares? We're up like 500 or 600% in a high interest rate environment. We can keep going in a high interest rate environment. But there's lots of short-term traders that are trying to day trade in and out of Bitcoin. And so when you get news that the Federal Reserve is not going to lower interest rate, they freak out and they dump their Bitcoin, etc. The other phenomenon, which I want to speak specifically about, is the concept of an air pocket. What is an air pocket? How do they emerge? And what are they? Okay, so an air pocket happens when a price very quickly cuts through a price level, allowing very little time for people to buy or sell at that price level. So in this case, we bounced around. The highest Bitcoin had ever been was $112,000 for like a second, literally a second, and it had traded below that. And then in the course of like a day, Bitcoin shot through 112,000 up to north of 115,000, and then basically spent a whole lot of time between 115 and 123, bouncing around. So everybody that wanted to buy or sell Bitcoin between 115 and 123 had plenty of time to do that. But all the people that were willing to sell Bitcoin between 112 and 115, most of those people just hung on. So out of 8 billion people in the world, there's some number of people that were waiting for Bitcoin to hit a certain number before they cash some out to go on a nice vacation, or they cash some out for a down payment on a house, or they cash some out to pay, pay off some medical bills, whatever it is that people use Bitcoin for. And when the price, let's say a lot of those people were like, okay, the highest it's ever been is 112. If it ever goes north of 112, I'm going to sell. Well, they stop paying attention, or they get home from work and it like shot through 112, 113, 114, 115. Now it's at 116, 117. And they're like, wait, now I don't want to sell anymore because it's going up so fast that even though I said I was going to sell to get a down payment for a house, now I don't want to anymore because it's going up so fast. Well, what eventually happens is the price starts dipping. And when it starts dipping, everybody that was willing to sell between 112 and 115 starts freaking out because they think, uh-oh, it's dropping. Maybe it's going to drop below 112 and I'm not going to be able to cash out to get a down payment on a house or buy a new car or whatever it is, or to go on a nice vacation. So they start selling, trying to get ahead of that. And so that pulls you into what's called the air pocket. An air pocket emerges when the price shoots up or down through a price range very quickly with no trading activity, which is like this. It's like you get on an elevator. And again, I like to use floors are like $1,000. So a lot of people get on the elevator between the 90th floor, the 100th floor, 112th floor. Again, add 1,000 for the price of Bitcoin. So there's a lot of people that are like, hey, this elevator keeps going up and down and up and down and up and down. If it ever goes higher than the 112th floor, I'm getting off. I'll get off at 113, 114, 115. I don't care. I'm just getting off if it ever goes to a new all-time high. So then they start messing with their phone and the elevator dings a few times and they're like, wait, 117? I think I'm going to stay on a little while longer because it's going up. It might keep going up. And if it keeps going up, I might even be happier. But again, you got to remember, these people have what's called paper hands as opposed to diamond hands. Diamond hands are hands that can hold an asset through thick and thin no matter what. People like me. Then there's people with paper hands. Paper hands are people that are barely holding on to what they're holding. They're holding it very loosely and can be very easily shaken out of the market. So when the price starts to dip due to supply and demand or due to the Federal Reserve announcing something, those people with paper hands freak out, they sell their Bitcoin, and it forces us to bounce around in this 112 to 115 range. Now, could we go lower than 112? Sure. There could be a myriad of factors that affect supply and demand that could cause the price to go lower than 112. But usually when you get lower than an air pocket, there's a lot more trading activity that happened down there, so it tends to push the price higher. Now, we could also go through another 32% price dip. We have had two 32% price dips just in the last, I think, 2 years. On the way up to where we are, on the way up from below $20,000 to above $120,000, we've had two 32% price corrections. Obviously, it could correct more than that. It could correct 40%, 50%. Nobody knows. All that matters is Bitcoin goes up in the long term. But when you create an air pocket because you slice through that trading range with almost nobody transacting, it just means a lot of people were willing to transact, but now they're sitting at higher levels with paper hands. And so what tends to happen is, not with certainty, that price gets sucked back into that air pocket to spend a little time there to fill in that air pocket with people buying and selling, buying and selling, buying and selling, until there's been a fair amount of buying and selling in that range, and then you sort of have support to go higher. Now, I know the question you're asking, which is, hey, if there was an air pocket between 112 and 115, why did anybody buy at a price higher than that? And the answer is because there's no guarantee you're going to go back and fill in that air pocket. And you're an idiot if you don't buy Bitcoin because there's an air pocket and you're willing to miss out on the entire upside between here and $1 million hoping for an air pocket. So let me run some numbers by you what I mean. Okay, in percentage terms, between 115 and 112 is less than 3%. Between 116, 118 and 112 is only like 5, let's call it 5%. It's a little between 5 and 6%. So let's imagine Bitcoin in the future is above $100 million per coin sometime 5 or 10 years from now. And you're sitting down with somebody and saying, I remember when Bitcoin was barely above 100,000. And they're like, ooh, you were into Bitcoin way back then. Did you buy a ton? You're like, and here's where the story starts. As soon as there's a story, it's a bad story. The story was, well, I should have, but it was 117, and I thought it was going to go down to 112, so I was planning to buy at 113, and then it never went below 114, and then I never bought the Bitcoin, and now I missed out on 1,000% returns, 10,000% returns. So let's run the math. A logical person would say, wait, the upside was between 1,000% and 10,000%. And you were not willing to take 100% to 10,000, sorry, you were not willing to take 1,000% to 10,000% return on your money because you wanted 5% more than that. So you imagine this on scales. On one side of the scale, you have the possibility of getting Bitcoin 5% cheaper. On the other side of the scale, you have between 1,000 and 10,000% return. Now, you got to be an idiot to say, I'm going to take the 5%. I want that 5%. I'm willing to risk the entire upside of Bitcoin to get an extra 5%. Now, you might be thinking, hey, it's not that bad because if it just keeps going up, I'll just buy. So you're saying, okay, so instead of 117 or 118, you're going to wait for the air pocket, and then if the air pocket never comes, you'll just buy it like $130,000. So you're basically planning to either get a 5% discount or chase the price up to infinity. Well, what happens when the price runs away from you, which happens all the time, right? What about all the people who are like, if it dips, it's at 100 108. If it dips to 105, I'll buy some. And then in a matter of a few days, it shoots to 123. What are they going to do? Buy it 123? No, they're going to freak out and not buy it all because it feels too expensive. That's what humans do. It's like my friend who sold 100 Bitcoin, which is now worth more than $10 million. What is that? 100? What is I guess it's $10 million. 100 Bitcoin worth more than $10 million. And he sold them at 10,000 a coin, planning to buy them back cheaper. But by the time he checked the price had tripled, so it was $30,000 to buy what is now $10 million of Bitcoin, and he just couldn't bring himself to pay $30,000 for something he had just sold for $10,000. So that's the way it works. If you don't go ahead and buy it, then when you don't get the air pocket and the price runs away from you, people freak out and they're like, if I was going to buy it, I should have bought it in the air pocket, but because the air pocket never came, I didn't, and I guess that one was just the one that got away. And then they watch 10,000% return. So my friend, I asked him, I was like, okay, so you sold it at $100 a Bitcoin. You did not want to rebuy it at $300 a Bitcoin. Did you buy any Bitcoin after that? And he was like, no, because every price after that was more expensive. So he's watched Bitcoin go from $300 to $113,000, never buying any more Bitcoin because he feels like he missed out. He feels like if he was going to buy, he should have held on to the Bitcoin at $100. And then if $300 a coin was too expensive, so is $500, so is $1,000, and you don't buy it. So that there will be a ton of people waiting for lower prices that don't buy the lower prices when they come, because if the lower prices come, now they don't want to buy them because they're freaking out. They're like, I'll buy it in the air pocket. But then when the air pocket comes, they're like, but the price is dropping. Well, of course. How do you think you go from 117 or 118 down to 113? The price has got to drop. But human psychology is as soon as the price starts to drop, they freak out and they don't want to buy anymore. So if you're waiting for an air pocket, the air pocket may never get here. So then you're screwed because the air pocket never arrives. You never buy the Bitcoin. Or you wait for the air pocket and the air pocket does arrive, but because the way you get to an air pocket is with falling prices, you freak out and you don't buy because you think, if we drop from 118 down to 113, something must be wrong with Bitcoin. And then you don't watch it all. Then you don't buy it all, and then you miss out. So you got two ways of missing out. Or the air pocket doesn't come and you end up buying back in at a much higher price. So you lose three ways. So why do I say just buy Bitcoin? Because it's a guaranteed win. Sure, you might have gotten a 5% discount if you waited, but that's a fool's game. It is an absolute fool's errand to constantly be waiting for 5% lower prices, hoping and being willing to miss up on all the upside just to try to get 5% better. So again, if you bought Bitcoin between 115 and 123, good for you. In the long term, it won't matter. If you didn't buy Bitcoin up there, great, you can buy it now. But if you're waiting for it to go even lower, I'm telling you, you're just going to miss out. People just do this all the time. And I experienced this myself back when you take a zero off all the numbers. So back in the early days of Bitcoin, I was not early to Bitcoin. 2017, 2018, when I got involved in Bitcoin, that was not early. But we're all early in the long term. Nobody feels early. I don't feel early because everybody I talked to was buying Bitcoin in 2013 and 2014, and everybody they talked to was buying Bitcoin in 2011 and 2012. Like, everybody feels like they're late to Bitcoin. Anyway, give me 1 second here. So let's knock $1,000 off the price. So when I was let's knock 3 zeros is what I meant off the price, or I guess 2 zeros. Well, let's do 1 zero, but it applies to 1, 2, 3, 4, and 5 zeros. Anyway, so I remember when Bitcoin was trading between $11,000 and $12,000, which on a percentage basis is exactly the same as it trading between 110 and 120, right? 110, 120 is the same as 11 and 12. So I remember when it was trading between that. And of course, there were air pockets back then too. And everybody's talking about, I'm not going to buy Bitcoin at 11,800. I'm waiting for 11,300. But no, what about 11,500? But then I don't want to be greedy, so I'll buy it at 11,400. Do you think anyone cares right now whether somebody bought Bitcoin at 113 or at 11,300 or 11,500 or 11,700 or 11,800 or 12,300, which is the equivalent of the highest it's ever been now. 123 would translate back then to 11,000 or 12,300. Nobody cares. Everybody just wishes they had bought as much as they possibly could buy, because that's the only way to win in Bitcoin. Buy as much as you can, whenever you can, and hold on to it for as long as conceivably possible. So trying to time markets, trying to wait for air pockets, it's a fool's errand. So if it's a fool's errand, then why does James Check tell you about things like air pockets? And the answer is so that you understand them when they get here. So when you dip into an air pocket and you trade there, instead of feeling like you're lost or you're off the track or off the trail, it's like, oh, this makes sense. Now that we're between 112 and 115, we might hang out here a little while. We might not, but we might. But it's not like there's nothing wrong that we're here. It's just like, hey, there was an air pocket down there and the marketplace decided to revisit it because air pockets have a little bit of a magnetic draw to them. Now, again, the gravitational pull is up, not down in the case of Bitcoin. So long term, it's always being pulled up by the laws of supply and demand and greater worldwide adoption. But in the near term, you get these air pockets that are like this little magnetic attraction that's pulling it down. So here we are in the air pocket. We might be here a little while. We might not. We might go lower. Nobody knows. Just buy as much Bitcoin as you can. Hold on to it for as long as conceivably possible. And the last thing I'll say is I try to be your Sherpa, which means make all this stuff easy to understand. My Sherpa is James Check, Checkmate. He goes by the Checkmate or Checkmatey, M-A-T-E-Y, I think it is, or E-Y, Y or E-Y, whatever, Checkmate on Twitter. He is my Sherpa because he does all the technical analysis. He's the only technical analyst that makes any sense. Most of them are just complete garbage. But he identifies things like this and he says, look, this is human behavior. When you shoot through a price level and basically almost nobody trades between 112 and 115, there are people sitting out there with weak hands. You got paper-handed Bitcoiners out there that were willing to sell. They're sort of sitting on the edge of their seat, afraid that they're going to miss the opportunity to get a down payment on a house. And if you dip back into that range, those people are going to freak out. They're afraid it's going to go below the 112, which was the highest it had ever been before. But now they don't want to get less than that. And so they're going to be selling. So there's going to be buying and selling. So I don't know. We could spend 5 minutes more in this range. We could spend another couple days. We could spend a couple hours. We could spend weeks. I don't know. It doesn't matter in the long term, because in the long term, all the prices are going to seem low in the long term, and the long term is all that matters. So hope all that helps. We're in the air pocket. There was no guarantee we were going to get here. It does not make any sense to wait for an air pocket because, again, for all the reasons I said, you're going to end up missing out, screwing yourself over. Happens all the time. But we are here. And again, if you want to follow things just play by play, bit by bit, every step of the way, James Check is a better guide than I am. He's just a little bit more technical than I am, which is why I try to be your guide as well. First of all, I'm free. He charges $29 a month. So everything I do at my own expense, out of my own pocket, for absolutely free. So I want to get free content out there so that nobody has to pay a subscription. Nobody has to buy anything to get content. And also because I try to take what James Check does and simplify it to the masses even one more step than he does. He tries to make it pretty accessible. I try to make it accessible even to a whole nother level than even what he does. So hopefully all this helps. Nothing's wrong with Bitcoin. The Bitcoin blockchain is processing transactions. I can still, if I had $1 billion, I could still move $1 billion to the other side of the world in a minute. And the Bitcoin blockchain is doing the same thing the champion Bitcoin blockchain always does, which is be amazing, be secure, be decentralized, be unconfiscatable, untouchable by governments. Bitcoin is the same amazing thing it's always been. We're just in an air pocket based on supply and demand. In the long term, no one will care. Hope all that helps. Buy as much Bitcoin as you can. Hold on to it for as long as conceivably possible. Same strategy as always. Same formula as always. Have a great day, everyone.